Hello and welcome to this episode of Macro Sutra. I'm TCA Sharad Raghavan, Deputy Editor at ThePrint. And now everything that we're hearing about the US economy seems to show that something has drastically changed about the outlook of the economy from just a few months ago. A few months ago, things were looking good, but suddenly there's a lot of talk of recession. And, so to look at what's happening with the economy, why has the mood suddenly changed? To discuss all of this, we have with you Radhika Pandey, Associate Professor at NIPFP. Thank you so much, Radhika, for joining us. So now, Radhika, I mentioned that the outlook has changed, but could you tell us a little bit more about how has the outlook changed and what was the small time period in which this complete flip seems to have happened?
Yes, so till the end of the last year, US economy was looking in good shape, and if we look at various projections by the standard setting agencies, they were all predicting a strong growth for the US economy. And in fact, whatever growth was being talked about in advanced economies was only driven by the US economy, considering the weakness in the EU and other nations. So US economy was looking strong, labor market was looking good, GDP growth numbers were looking good, so everything was fine. But now after Trump's inauguration also, things were looking fine. There was optimism around Trump's policies that it will be the policies will give a further boost to growth. They will bring down prices. Pro business. They will bring the policies will bring down prices. Will be good for industries and so on. So initially the markets gave a heads up to Trump's policies, and even the growth estimates. So there is very interesting concept of nowcast. Nowcast is based on the incoming data. What do you predict about the quarter in which you are in? For example, currently we are in the January to March quarter. So depending upon the incoming data, the nowcast estimates for that particular quarter is changed depending upon the information flow. So initially, till as recent as the beginning of February, GDP growth for the US was nowcast predicted at 4%. So the nowcast for the January to March quarter was predicted at 4%. And then came this entire conversation around tariffs, not only on China, but on Mexico, on Canada, metal tariffs, reciprocal tariffs, doubling of tariffs, and so on. And after that, there was a complete change in sentiments. And the one key driver which led to a sharp deceleration in the nowcast was the trade deficit data, because businesses started front loading imports before actually the tariffs kick in, because ultimately who's going to pay the tariffs are the importers. So the US importers will pay the tariff. Things will become costly for them. So as a result, it resulted in increase in trade deficit, and therefore the nowcast for the US growth went down drastically. So from 4% now, as per the recent estimate, the nowcast for the US economy is now showing a contraction rather than a positive. Now it's a contraction of 2.4%. So from 4% growth, now we are expecting a contraction as per the current data. It may improve, but it is not expected to improve drastically. But overall, things like high trade deficit, slump in consumption spending because of inflation fears, all of this has led to a drastic change in the economic outlook for the US, and also this uncertainty around policies. Businesses are also uncertain whether they would like to increase their capital expenditures or not. So overall slowdown in growth, high prices, low demand, all of this has resulted in a change in economic outlook.
Right, and I think it's also important to address this whole fear of a recession. Now, a recession happens when growth is negative for successive quarters, not just for one quarter. So,
or two successive
quarters, right? So, just because even if this quarter's growth comes in as negative doesn't mean that the US has already slipped into a recession. Growth is negative, it might be positive the next quarter, which will then hold off a technical recession. But now you mentioned that the trade deficit has been zooming and that that was one of the major factors. Is there
Right.
anything more about trade that you wanted to talk
Yes,
about?
so that's the main indicator that has actually caused a decline in the economic outlook, because trade deficit for the month of January has increased by almost 34% as compared to December.
Right.
So trade deficit with some of the important trading partners of the US like Mexico and Australia, it has zoomed a lot, because they are buying up more before the implication of tariffs actually kick in. So imports of things like metal, imports of pharmaceuticals, imports of computers have surged dramatically in January, and that is one reason why trade deficit has increased. Now, going forward, exports are also likely to be hit, because the other trading partners will also impose retaliation.
Yes.
They will impose counter tariffs. So US exports are likely to be hit, and therefore this trade deficit is not something which is likely to be bridged. It may get further, the deficit, the gap may increase further.
Right. And the other thing, as you mentioned, that Trump, the expectation was in line with his promises that he'd bring inflation down.
Right.
But what is actually happening with inflation?
Yeah, so actually, so the main reason why people were unhappy with the previous government was due to the increase in prices, and there was this expectation that Trump's policies would bring down prices, but actually the reverse has happened, because one reason is of tariffs that has resulted in increase in prices, and that has resulted in also a decline in consumer sentiment, because in parallel to the imposition of tariffs, what is happening is a massive downsizing of federal workforce. So that has resulted in anxiety, that has resulted in reduction in demand. And in order to ensure that there is no joblessness, what needs to happen is that the private sector needs to absorb this workforce. And private sector won't absorb unless they are quite sure about the magnitude of tariffs and what will be the implication for them. So as an outcome of all this, inflation is rising, and it's not currently showing in the current numbers, which came yesterday showing a 2.8% inflation. But going forward, the consumers expect inflation to rise. So the year ahead inflation expectation has actually increased by 1 percentage point in 1 month.
Right.
So from January to February, now the year ahead inflation expectation has surged to 4.3%. from 3.3%. And it's not only that they expect that, it's only a year phenomenon. They expect that inflation is likely to remain elevated for a long period of time. So even the long run inflation expectations have increased. So that is one reason that inflation is rising, and at the same time we have a slump in consumption demand. So there are these situation of stagflation building up. There are these fears of stagflation building up, which going forward could complicate the task of the Federal Reserve.
Of course. And now, one of the main drivers of the rupee depreciation, something that we've talked about before in previous episodes, is that the dollar index was strengthening.
Yes.
And that was the reason why a lot of currencies were also falling against the dollar. But now that seems to be slowing or reversing?
Yes, that seems to be slowing. Again, same reasons. One is increase in inflation, the growth slowdown. As a result, the expected dollar index is declining. So that is the domestic reason. But externally also, there are some factors that are causing weakness in the dollar index. One is that euro is suddenly showing signs of a rebound.
Of strength.
The European region, in particular, last week, Germany announced a shift in its fiscal framework from strict adherence to fiscal rules to something called, to more tolerance towards fiscal easing. So they have boosted their defense spending, and they have set up an infrastructure fund. So all this would lead to increase in expenditure, and there is this expectation that with this increase in expenditure, the demand would pick up. So as an outcome of all this, as an outcome of this hope, the euro is rising. And because the dollar index, within the dollar index, the main constituent is the euro. So if the euro is appreciating, by implication, the dollar index is weakening. So the weakness in the dollar index is a culmination of their own domestic policy conundrum issues, as well as the external factors like the relative strengthening of the dollar, strengthening of the euro. And also what's going to play a key role going forward is the policies in China, because China has also announced a massive stimulus measures, and that will also impart strength to the Chinese currency, and on relative terms the US dollar index is expected to weaken further. So the kind of strength that we saw when Trump became the president, and all the policy anticipation, now the reversal is being seen in the recent days.
And US government debt levels have always, that they've been elevated for a long time now.
Yes.
And there's been a lot of concern about that. But now it seems that that concern is now becoming even more urgent.
Yes. So in absolute terms, the US debt level has now surged to $36 trillion. So that's a big amount. And also the deficit. So the US Congressional Budget Office releases figures of deficit, like we have the CGA, their office releases the deficit figures, and for the 5 months, so their fiscal is counted from the month of October. So from October till February, the budget deficit has already crossed $1 trillion, which is 38% more than the corresponding period of last year. So that is one concern. And going forward, there are two very important aspects. One is that they are going to make the tax cuts that were announced in 2017 a permanent feature. That will worsen the outlook for debt. And the other important thing is that of the outstanding stock of debt, there is going to be a big refinancing, or a big repayment is coming up in this year, which either will have to be repaid or would have to be refinanced. So almost out of the $36 trillion, $9 trillion is likely to be is scheduled to be repaid this year, and of that $9 trillion, 70% has to be done by June. So there is a lot of refinancing that needs to be done. There is going to be this redemption burden, which will lead to increase in the bond yields. And the other important factor here is that a lot of countries are going to respond to trade wars through debt war. They might dispense with holdings of US bonds. They might sell. So there could be, going forward, there could be a intensive selling pressure of the US securities that would lead to increase in the US bond yield, increase in the interest costs, and that would further lead to an across the board increase in interest costs across the US.
A burden for the US.
Yes.
Right. And okay, so now we also have a set of excellent questions from the audience. Karthik asks, will we see de-dollarization happening? And is the US going through the same phase as the UK went through after the Second World War?
So yes, when we talk about de-dollarization, it is something which has gradually already started. The impetus is coming from three main countries: China, Russia, and Saudi Arabia. We have seen that to avoid sanctions, a lot of payments have already started in Chinese currency. Russia is exporting oil to a lot of Asian markets in non-dollar currencies. Like we have this concept of petrodollar. Now we have this concept of gold-backed petro-yuan, which is gaining traction after Chinese president's visit to Saudi Arabia. So as a result, all these moves towards de-dollarization have begun, and they will gain further traction with all these policies, because there would be greater impetus towards non-US trade blocks, trade regions, and so on. And the other important factor in this regard is also that a lot of central banks are increasing their holdings of gold. They are reducing their share of dollars, and on relative terms, the share of gold is rising. And that's true for India also. So all these things together show that there is a movement towards de-dollarization. But again, to be sure, this is not something an overnight phenomenon. It will take a lot of time, because it's not very easy to have a viable alternative, globally viable alternative to the dollar. So it will take time. But yes, if these policies, this uncertainty, this back and forth on tariffs continues, it will give impetus to the moves towards de-dollarization.
Right. And the US and the UK after the Second World War is
Yeah, so it can become, that is something that we need to see over the coming
it'll take
years.
some time.
It will
Yeah.
take some time, because now only yesterday the first set of tariffs, the metal tariffs, came into effect, and we have now seen that EU is going to impose counter tariffs. So as and when, it will become more clearer once the reciprocal tariffs also kick in, and we get to know the exact design of reciprocal tariffs and
Right.
how what would be the policy responses of countries going forward. Are they going to shun the US bond holdings completely? That will be something quite disastrous and catastrophic for the US debt outlook, and so that is something we need to see over the next couple of months, so the things would unfold.
Okay. And Aditya asks, with other countries like Europe and Canada also jumping into this tariff war, how much impact would this have on Indian exports, especially our service exports? Are we heading towards the pre-liberalization or globalization era where the world economy was not integrating much?
Yeah, so this is something to worry about, because there are these while textbook definition of recession is 2 consecutive quarters of negative growth, but there are these fears about recession, and the probability of recession has increased. So a
Of
lot of
course.
these agencies talk about what is the probability of recession. So that probability percentage has increased by a big margin over the last couple of weeks. So as a result, and even if we look at the market meltdown that is now happening in the US, it is primarily driven by technology stocks.
Right.
So Tesla and other technology stocks are suffering. So as a result, that is going to have an impact on the India's service economy, services exports. And the biggest manifestation of this is India's Nifty index, that is showing a steep deceleration over the last 2-3 days. So Nifty index is down by a big margin. So yes, there are these concerns because of the developments, the disruption that is happening in the IT space in the US, and the counter moves by the trading partners of the US.
Right. And now Sankalp asks, he says, should one label it as trouble or a transition, what's happening in the US right now? Don't you think it will depend on the US's ability to recalibrate supply chains or build their own manufacturing? It's not like Trump's tariff destinations are monopsonies.
So right now, if we look at what the government is saying, if we look at the government statement, they are saying that it is a transition, and even if the cost of this is a recession, we are okay with it, because they are saying that we are doing a detox of the economy, and we are in a transition mode. We are trying to make America great again, and in that process, there will be these short-term costs. But a lot of this depends on the response by the trading partners. So it's not just the US, it's not it's not just the unilateral moves by the US which will determine the outcome. It will be also dependent upon how the trading partners react, what will be the impact of the tariffs, and what will be the counter policy response. And as I said, that the response may not be just a tit for tat in terms of tariff. It could be, as I said, in the form of shunning US bonds, it could be in the form of shunning US dollars, and so on. So the response will differ greatly, and that will determine whether it's just a transition phase or it's actually a trouble, because the other macro parameters of the US are also flashing red. It's not just the tariffs part.
Right.
We are seeing inflation is rising. Debt is particularly a problematic area which needs to be addressed going forward. By June, they have to take a call on that. So all of that could get, the problem could get accentuated with the response of the other trading partners.
Okay, so there you go. The US economy looks like it is in trouble. It's not just one or two indicators, there's several of them. There's the trade deficit, which is likely to remain elevated, if not even grow even more over the next few months. Similarly, inflation is expected to remain high. The US debt levels are now reaching very alarming levels, and there are some deadlines coming up where large amounts of repayments or refinancing is going to happen. So things are not looking great. And the thing is that a lot of this changed in just the last few months. Just when Donald Trump had come in as US president, when he'd won the elections, in fact, the outlook on the US economy was quite strong, but now that seems to have completely petered out, where in this quarter they might even be looking at growth going into the negative territory. Now, whether it becomes a technical recession where two successive quarters have to be in negative territory, we'll have to wait and see. But as of now, things are not looking great, and it's the biggest economy in the world, so it affects the world as well. But on that note, that's all from us. Thank you so much for watching.